Welcome to the On the Tape podcast. I'm your host, Danny Moses, and I welcome back to the pod for the third time since the On the Tape relaunch. My former partners, Porter Collins and Vincent Daniel of Seawolf Capital. For those not familiar with you or your backgrounds, guys, let's start with the Olympic rower, played by Hamish Linklater in The Big Short. Porter, give me a little background on you.
Porter Collins, former partner of Danny Moses, and
come on, Goldman Sachs.
Just happy to be here.
Little Chilton. Give the fans a little background here.
Yes, I was a two-time Olympic rower.
There you go. You're so modest.
Now retired.
Yeah,
retired. Then I did a little stint at Goldman Sachs. I started working for Steve at Chilton. Then Steve Eisman, Vinny, and I started Front Point Financial Services back in the day in 2003. We ran that through the great financial crisis to about 2011. And in 2012, the three of us, donkeys, started Seawolf Capital. And here we are today.
Perfect. And Vinny, you helped launch Jeremy Strong's career, obviously, as he portrayed you in The Big Short.
I did, yeah. Well, he did movies before us, but yeah, but I'll take credit. I'll take credit for it, I guess.
I don't think The Judge counts with Robert Duvall, but anyway.
That's the one I was thinking about, The Judge. He was really good in The Judge, by the way.
So, Vinny, we met in the mid-'90s at Oppenheimer when you worked with Steve and Meredith Whitney. Little background for the people on your auditing and specialty finance background here.
Sure. So I prior to working with Danny at Oppenheimer, and Danny was on the sales desk and I was a junior research analyst, my first job was an auditor at Arthur Andersen, if anybody remembers that name, got taken down by Enron.
I was curious, Vinny, did they audit the NBA draft last night? Because that was amazing.
I was debating what was more audited, the NBA draft or today's CPI data.
Interesting.
It's probably pretty damn close.
Doctor, can't you see him burning?
Exactly.
All right, keep going.
Little Thompson twins action. After doing 2 years of audit and get my CPA, Danny and I worked on the sell side. And then we all sort of joined forces a few years later at Front Point, working for a hedge fund with Steve Eisman and the whole Big Short thing and the like. And Porter and I now are just managing our own money. Porter likes to say he's retired. I like to say I'm an out-of-work hairdresser.
Your hair looks great, by the way.
Thank you. If anyone gets that reference. But we're just at it and enjoying managing our money and navigating through markets.
All right. So I was going to start with that. So we're going to get to the landscape, obviously, the markets right now, but we talk about this all the time. It must be great right now to not be managing other people's money in this type of market and volatility. I imagine it kind of changes your mindset if you have, duration of capital and not have to worry about writing the quarterly letter or having, like we would have calls sometimes weekly at Seawolf when there was a lot of volatility. So talk to that and how that changes the way that you kind of manage money and think about things.
For the first time in a while, I said to Vinny, I wouldn't mind managing some money when the drawdown happens, right? Like I love it when markets are down because your favorite positions, they go on sale, right? And you get a chance to buy them. And I think you have to have that mentality of when markets do go down, hey, what's on sale? What can I do? I had an old boss a long time ago that said, you always got to upgrade your portfolio on sell-offs, figure out what's cheap out there. Right now, I actually think that it's one of the better stock picking times because kind of like what happened in COVID. I like to use the analogy of a glass jar of marbles and they just smashed on the floor. Trump did something similar with his Liberation Day. And, I don't think most professional people we talk to, most retail people we talk to are confused as hell. And so I think that's for us, an environment for a higher gross, more shorts, more longs, more stock picking, more differentiation. And I see it all over the place. And I still think that flows are so dominant that value hasn't sorted out yet, if that makes any sense, right? It's just right now, everything is just flows and proper value hasn't been ascribed to a lot of securities.
It is amazing that even during the drawdown post-Liberation Day, that retail flows stayed pretty consistent on the way in. And so certainly it's worth noting, right? It takes a lot to kind of break this market and the flows. So Vinny Porter obviously just made a comment. It's a decent stock picking environment. I agree. I think you need to be patient at times and know that the themes and thesis might not play out immediately. Talk about kind of upgrading the portfolio. I always talk about when the market swings up like this, be honest with yourself and unload some crap. And when the market trades down, take advantage of it and buy the stuff that you know from bottom up. So how do you see that environment? And I would add to that, Vinny, since you're kind of the specialty finance guy, in such a financialized economy globally in the US, how you incorporate that into your thought process.
Well, in many respects, I agree with everything you guys are saying in terms of upgrading the portfolio and the like. But you have to keep in mind, and I think we just saw it over the last 2-3 weeks after Liberation Day, how financialized we are. We joke around and say almost every single major drawdown in stocks is now followed by a V-shaped recovery. Now, why is that the case? Like historically, that hasn't been the case in our careers, but it has been over the last 10 to 14 years. And I think it's a function of the fact that when you are so financialized and liquidity is so important to the markets, and more than ever, I think in the history of our country, or at least it's close. I don't want to sound like Trump and saying, but we are now more reliant on the wealth that resides in publicly traded equities than ever before in our lives. So to quote Luke Gromen, who you've had on your podcast, it is a matter of national security that the Mag 7 or the 20 largest market capitalization names can't go down. Because if they do, it's going to have a sizable impact on the economy. So I'm not surprised, and we could get into what we think has happened and what is happening now. I'm not surprised. I can't say we took advantage of it. We tend to be too bearish to do so. But I'm not surprised that the liquidity was injected in some way, shape, form, or fashion, whether it was the narrative that created liquidity, that got the VIX down, that made the markets go up, because they had no choice. They had to do it. Now we sit at an interesting place where markets are overall. But nevertheless, it's something I think about all the time in terms of how important markets are. So keep your bearish tendencies. I think Druckenmiller said this. He tends to run bearish more than not, but he keeps his tendencies in the closet. And I think we try to do that as well and express it in different ways.
So we've all been fortunate. You mentioned Luke Gromen here. We've been fortunate over the years to kind of build a community that consists of, and this is your words, Vinny, the land of misfit toys, that are brilliant, deep thinkers, that things seem to matter for days at a time, sometimes an hour at a time, and then it's quickly mitigated by, to your point, Vinny, just flows or change in policy. Let's talk about that, Porter. It feels like we're just kind of treating the sickness a little bit here and not really curing it to a degree. How do you kind of bob and weave through that? I know you mentioned kind of upgrading your portfolio, but how do you think about that? And you're really good at kind of putting politics aside and just trade whatever's on the field. So I'd love your thoughts there.
Well, I think Vinny and I turned to each other about 3 weeks ago and we said, are they really just going to V the market again? Like just, there's a V bottom, it's over, whatever. And so we've been joking around, or I've been joking around about Pavlov's dogs, right? Where he kept on ringing the bell and they'd salivate, the dogs would salivate every time the bell rings. Well, about 3 weeks ago, we said, well, Trump and Vincent have found the buzzer. And they just hit the algos with, a trade deal coming, we're going to, buy stocks, buy Teslas, all this stuff. And so I think that they realized they pivoted hard, right? They went in for this big tariff thing. Markets crashed, bonds crashed, dollar crashed, and Trump said, I got to pivot. And I think we all said that last time we were together, said like, this can't last. It has to pivot. And he pivoted on everything. He basically caved on everything he had. And so, which is fine. It was sort of a policy error, I think. And we can all agree on that and how we did it execution wise. So I give Trump credit in being a chameleon, right? He's now pivoted hard to, he doesn't talk about Doge. Elon's in the closet somewhere. And now they're talking about, healthcare and a big, beautiful tax bill, right? Which includes, $4 trillion of, debt ceiling relief. So, we're clearly not in a, we've pivoted from getting the deficit down to getting the deficit up and the stock market up.
So let's talk about those issues. So let's talk about tariffs and whatever resolution, 90-day pause here, 90-day there. We're still looking at a 30% tariff from China here on imports. So that's going to be a big deal. And I think we're getting caught up a little bit in the euphoria of there just being not 145%, which I think we all said was not possible. It wasn't going to happen. And the people that did say, oh, no, work its way into the economy, didn't know what they were talking about. So we're going to have some aftershocks from that. The question, Vinny, is does the market look past that at this point and say, oh, that's a Q2 event, we'll absorb, or will the reality start to set in that some of these policies were just nonsensical and they are going to have lasting impacts on the behavior of U.S. consumers and U.S. businesses?
I think the market will look past it. And simply being, I think they've concluded, perhaps rightfully so, the market, is that, hey, look, if the markets get wobbly again, he'll change his mind and 30 will become 20 and 20 will become 10. And eventually everyone feels, at least people, the talking heads out there, and I think they're right, is that he eventually wants 10% across the board tariffs. So that's where we're probably going, maybe a little bit more elevated for China. But I think the market is correctly saying he's caved once, he's caved twice, he'll cave again. So why am I worried about 30% tariffs? The minute it becomes a problem, 30 will become 10. I'm not saying I agree or disagree with it. It's just what the market's saying. So to me, I think they're going to look through it. I think they're going to assume, perhaps rightfully so, we'll see, that we will have a resurgence of the supply chains working again, which will have an interesting impact on the price of energy and other things, but nevertheless. But you will start to see, as Porter was saying, a return to what was going to be the initial Trump growth policies, right? Which was deregulation, pro-growth, energy as an export. All those things that he was talking about pre-tariffs, I think, come back into the forefront. The question we keep asking ourselves is, at S&P, where it is right now, which I think, 3 or 4% across the all-time high, or 22 to 23 times earnings, how much is priced in? And quite frankly, we don't really care, simply because we're not market timers. In fact, we're probably the worst market timers in the game. But we think about it more from a thematic perspective on a sector-by-sector basis and a company-by-company basis.
So let's get into those sectors, Porter. I just want to say one thing to Vinny's comment on kind of 22 to 23 times earnings again, on what will be, I think, earnings coming down, at least temporarily. I'm of the belief that we're going to lose at least some premium on the U.S. markets given this inconsistent policy. At the end of the day, Trump was playing 2-7 offsuit, got called, and obviously folded here. And if anything, it sends a message to foreign countries that, hey, he's just kidding. He's not going to do anything because he knows it hurts them more than us. So factor that in, and let's talk about kind of how you're thinking about that, Porter.
So I think that, if you take our 2008 mindset of, there was the consumer was over levered, there was a debt problem, and everything crashed. I think that post 2008, everything moved to the sovereign, right? So the heavily indebted assets around the world are the governments, right? China's super indebted, US, France, all of Europe, right? And so if you think about it that way, the sovereign can get out of a problem in a different way. They can just print money, right? You and I or everybody else in the 2008 problem couldn't print money, right? But when it's a sovereign problem, they can print money. And I think that you're kind of seeing that and the money supply growth is off the charts right now. And you're sort of in this debasement inflationary world, right? I know CPI and whatever aside, but you're an asset inflated market. And everyone who was saying, there was a lot of talk about how this is the end of the dollar, the end of US exceptionalism, whatever. But you talk about currency and the dollar going down. Well, one thing it's going down against is gold, and the yuan and every other currency around the world is going down against gold, and that is the real neutral reserve asset, and that's how I think the three of us have thought about it for quite some time. And I know the three of us have been long gold since 2015 and 16. And, that is the true neutral reserve asset around the world. And it's shown itself, I think, over the past year. And, we continue to believe in it. And, we've had a good year so far because a lot of the gold miners are up plus 30%. That's obviously pretty good for a big chunk of our portfolio. Gold is coming through a little bit of a washing machine, overbought now, and Vin and I were laughing. People believe in the world again today, and so gold and silver aren't doing as well. So,
well, let's get into the gold trade here, and we're really talking about what is a kind of mid $20 trillion type asset that's obviously here to stay. And to your point, Porter, call it LIFO, kind of last in, first out on the people that bought gold at 3,300 to 3,500, and they're now all of a sudden experts on it saying, well, it doesn't work. And I would add to that Bitcoin actually has been outperforming gold over the last few weeks. It's kind of interesting to me. That never existed before in any crisis. But I push back to you, Porter, a little bit. I think there has been a degrading of American exceptionalism. I think there has been a slight degrading of the U.S. dollar just in standing. Whether we can earn that back over time, we'll see. It has to over time.
I don't disagree with that, Danny. I don't disagree with that. I don't disagree with that. I just,
Right. So to your point, and Vinny, I'll turn to you on this. It doesn't take a lot if you just kind of replace, or instead of, to your point, using S&P puts to express bearishness and all those points about American exceptionalism, et cetera, it's owning gold. And whether gold trades down or not, it feels like it's on a path to move much higher over time. So you mentioned before, you guys kind of the miners that you've played before. So how are you expressing the gold trade, and what are your thoughts on it?
One of the things we've done recently is make an assumption that gold prices will remain where they are, if not elevated. And once you do that and you roll it through your models, I think I said on the prior podcast maybe it was with Dan and Guy, that at these prices, and as I said, it's so easy a caveman can do it, that the spread between the spot price and your overall costs, your ASIC or your cash costs to extract stuff out of the ground, the spread is so high that some of the laggards should catch up. So we started searching for the laggards. We stumbled on Core CDE, which we own through Silvercrest. We stumbled on Dundee Precious Metals, tickers DPM. And the reason why we chose these two is, aside from the fact that we spoke to management at CDE, they were trading at 4 to 5 times EV to EBITDA. So once you do your work, once you see the valuation, then you start to actually do your work to see, are they credible? Do your friends who are ninjas in the mining space, are you barking up the wrong tree? So we started going down quality, so to speak, making the assumption that the bull market associated with gold over the long term will continue. And while I respect the choppiness, and Lord knows it can last for a little bit longer, because as Porter said, people believe in the world. At the end of the day, I don't know how we get out of this without debasement. I can't, the math, the logic doesn't make sense. And while there was, let's call it a 2-month effort to think that you can contain government costs via Doge and everything else, as Porter said, we put that in the closet. And this big, beautiful bill, I'm fairly certain that government expenditures are going to go up. And quite frankly, I think Trump is looking for places to find tax cuts for various different parts of our country. So when you think about that, how do you solve the equation? It's debasement, which eventually leads to gold and perhaps Bitcoin as well. And we own some Bitcoin as well.
Yeah, we did actually buy Bitcoin at the bottom. We trade Bitcoin more than we do gold. We've just held, but Bitcoin at the bottom, we sort of, when Liberation Day, that's one of the things we did pick up. So
as Vinny says, I think we'll call it CLASS as an acronym, crypto lobby as a service or something, Vinny, I think what you were saying before. But let's talk about the tax bill, and about, I think the most important thing, Porter, you already highlighted, is kind of the $4 to $5 trillion movement up in the debt ceiling from where it currently stands, and the whole idea of kicking the can down the road. And we'll get something done, and it'll take years to prove whether or not it was accretive to the U.S. government or it kind of hurt the budget. So how are you playing that? And are there certain segments within it whether it's housing as it relates to SALT and the exemption going up from 10,000, being able to deduct state and local taxes and up to 30,000.
Well, Danny, it's kind of like our Michael Cohen story about kick the can.
Yeah.
Mm-hmm.
Kick the
You wanna tell that
can.
one?
Kick the can.
I can't believe
They
they
kicked the can. Yeah.
We were short this stock. I think it was Con at the time. In one of the quarters, they put out and they kicked the can, and they didn't recognize they had a credit problem. And he comes to us like, I can't believe they kicked the can. And
There's
so,
actually a great line from Twilight Zone, the movie, but I'm too old. I'm dating myself about getting the old people and playing. They come out and play kick the can in the Twilight Zone. It certainly feels a little bit like the Twilight Zone, but tell me how you're looking at these things by sector. You can't play everything within it, but what you think is the most certain thing that you can take away from it if it does end up passing, as we've seen kind of with the language.
Quite frankly, a lot of this has not initially worked in the beginning, the first few months of the year, is just go long-term policies. Generally speaking, and part of his policies, as we said, is, grift seems to be, maybe it's just more out in the open relative to what it has been in the past, but it definitely seems to be quite elevated. So if you think about going long-term policies, right? And the most important thing is you got to keep your political biases aside, because it's not really going to help you. So as I mentioned a few things, don't get upset at me. One is long immigration reform, right? The one thing I know he's fairly certain of is he wants to control immigration. Be long deregulation themes, right? So when immigration reform, the names that pop out for us is Geo, which had a tough quarter. But all of what is the fundamentals are intact and are on the come. So as we said, as we look towards names where nothing really has changed, but the stock is down, we're looking to add on that, not subtract. We're long the GSEs still, which is a combination of grift and of the belief that they will eventually be privatized. It's not imminent, but it's probably coming over the next, say, 6 months to a year.
I'll just tack on that one. There's not many things out there that Trump can take a massive win on. It's a $300 to $400 billion gain that he can take on the Fanny and Freddy equity. So we think he uses that to fund his sovereign wealth fund or whatever. And so I just think that like their Ukraine metals deal, they'll do something with the Fanny and Freddie.
Well, you can't just gloss over Fannie and Freddie, which I don't believe is part of the tax bill, but to your point, it's another point they can make that can be kind of budget positive or current account positive. So let's talk about Fannie and Freddie. You guys have been, Vinny really is an expert in it, and you understand the dynamic of it, and you guys understand the political nature of it. So give me your thoughts there. I know people want to hear.
Well, the hardest part to reconcile is the political nature, because for whatever reason, these two names still represent third rail politics. I guess the beauty for the GSEs is that you have, and to be fair, you had this in Trump 1.0, but you really have it in Trump 2.0 now, is a president that doesn't really seem to give a shit about third rail politics. And so as a result, and more importantly, he, again, listen to what he says and what he wants. He fancies having a sovereign wealth fund. Well, I don't know how a country that's 37 trillion in debt and with fiscal deficits and current account deficits creates a sovereign wealth fund, but that's what he wants. So that's what he's going to get. And one of his assets is Fannie and Freddie. Now, on a fundamental basis, I mean, these things are gorgeous assets. They are regulated duopoly of providing credit insurance to the mortgage business, where they have, don't quote me exactly on this, but 60 to 70% market share in the mortgage business, providing credit insurance for 30-year guaranteed product. Fannie spits out around $15 to $17 billion of net income per year. And regardless of whether I think or I don't think, or whether I care or not care, whether these things should be privatized or not, there's a high probability that they will do so. And the preferreds right now, the junior preferreds to be specific, are trading at 50 cents on the dollar. That seems like a really good risk reward to take. That is long Trump policies, long grift, with valuation on our side.
So Bethany McLean was on the podcast last week, and she agrees with you that what they've done to Fannie and Freddie is ridiculous in terms of siphoning off the profits above and beyond what was ever intended. Porter, the follow-on of that, obviously, and Vinny, I think the implied guarantee will still be there. Maybe it's in the form of still they're paying some type of G fee, right? Which I think is what you call, which they'll be paying. So they'll solve for that. Porter, is that enough, you think, to keep kind of mortgage rates down? Or you think there'll be a perceived notion that it's, quote, a little bit riskier being on their own?
Well, I worry a little bit about the mortgage spread, but I think it's already high. And I think a bigger picture of this is they need rates down, right? Besant needs 10-year Treasury rates down, and 10-year Treasury again this morning is higher. We're looking at 250 10-year again
After a benign CPI print, Porter.
Yeah, I think it's a real problem. And so what do? They're going to do something, right? Whether it's SLR, and a friend of mine was talking to me yesterday about maybe there is Social Security reform, and they do a defined, change the defined benefit structure where they can, you can direct your own trades, and a lot of that probably go towards buying 10 years, right? So you need a way for the retail and American investor to buy treasuries, because none of us are buying treasuries.
Isn't that Porter? Isn't that technically a leveraged trade? You're getting paid by the U.S. Treasury, and then you're buying U.S. Treasuries. I hear what you're saying, but philosophically speaking, yeah.
But they're going to have to find a way to get more buyers of treasuries, right? And so, I just think that the playbook is very open right now. Whether it's changing the SLR requirements for the banks, they have a lot of debt to refinance, and the rates aren't going down. It's a real problem.
For people out there, the SLR, supplementary leverage ratio, it's what the banks are required capital to hold treasuries. For some reason, the risk weighting has been way too penal. We know that's a arrow in the quiver that they can pull out, but it is the be-all, end-all still. And so to your point, with this risk-on trade, you sell treasuries, they go to a certain level. Vinny, what do you think the level is? It's kind of, people are programmed towards 5%, and then at 5% is when people are like, because it is such a financialized economy. So I will argue, though, Porter and counter, that as U.S. Treasury yields have moved higher here in the last few days, credit spreads have actually tightened. It was actually the opposite of what we saw when U.S. Treasury yields were coming in, and there was a rally in treasuries from a risk-off perspective, and credit spreads were actually widening. So, Vinny, at what point?
That makes sense, Danny.
What's that?
That makes complete sense in the context of
risk on, risk off. I agree.
Risk on, more pro growth, more,
But this brings up my point about term premium versus safety. So, Vinny, let's talk about from the funding of the government perspective. You just touched on 37 trillion, 8 to 9 trillion needs to be refunded. I don't know what's left of that this year at this point. Raise the debt ceiling 4 trillion. GDP does okay, or it's up a couple percent. Your debt to GDP goes higher. When does that matter? And this goes back to kind of the gold theme. I know the answer, but Vinny, what are your thoughts? Because you deal in specialty finance, you deal with U.S. consumers. There's a level where it really matters.
Well, I think it's already mattering, Danny, in many respects. The issue is the thirst for yield of institutional and retail investors is so high that flows keep coming into these structured credit funds, and these people continue to invest, regardless of whether the incoming credit quality concerns are starting to disturb them or not. I personally think, this sounds very cliche, you already said it, but I think 5% or close to 5% really starts to get people's attention. And the sensitivities associated with the incremental funding. Now, I know we have a large funding cliff that's coming. However, a good portion of that funding cliff is in T-bills right now. And it will continue to be in T-bills. So many people will disregard how much funding is coming. But the one thing I will say, Besant talked a good, tough game about how Yellen screwed up about issuing T-bills in lieu of long duration funding. And he's doing the exact same thing. Well, why is he doing the exact same thing? Because we can't afford or can't issue long-term debt at these prices. Or if you put out a calendar issuance of massive long-term debt, funding, all else being equal, would probably blow out. So the one thing that they have yet to solve for in this Trump 2.0 economic pivot is what to do with rates. And I'm assuming we're going to see a heck of a lot more theatricality and deception. Stuff we're well, SLR being one of them, buying back older dated debt, pulling down the TGA, like all these, and hopefully trying to get a bargain or a trade agreement with some country that will buy our debt at significantly lower yields than where they probably should be.
And one thing I want to say is that, to sum this up, thank God Vinny and I changed shifted our bearishness from shorting stocks somewhere along the last decade to owning gold as a contra asset, right? Gold is completely uncorrelated or negatively correlated to the S&P. And we can own the gold and gold miner stocks and have an uncorrelated asset in the portfolio. You can put together a portfolio that has uncorrelated characteristics to itself rather than just owning tech, right? Which is, and beta one way. And so, thankfully we have a portfolio that has a bit of longs in beta and then a bit of longs in anti-beta, whether it's, Philip Morris has acted really well for us this year. Gold has acted, and gold miners have acted very well. Bitcoin has acted actually as a little bit of an uncorrelated asset this year too. So
let's get into some of those names. So one name that kind of has a lot of the stuff that we've been talking about is Sable Offshore, symbol SOC. Special situation really within the energy sector. Got hit just on the market sell-off. I always say it's a small cap names you can take advantage of. And this stock is up 50% in the last few weeks, just to give an idea. It's a little bit regulatory. It's a little bit company specific. Let's talk about Sable Offshore. Porter, you guys have been pretty outspoken on it, and then move into some other names in your portfolio.
Vin and I were laughing. We were going through our portfolio and looking at the weightings of what we have. Our biggest weighting is in energy, which is probably the most out of consensus thing imaginable in this on this planet. And so, obviously, a lot of it is dominated by Sable, which is right now. I think it's more of a legislative special sit, but they're closer to pumping oil, and so we've been very close to this position for quite some time, and they're navigating politics in California, which is very difficult to be able to finally pump oil off the platform and through their pipelines. And so we think that's the case, and we think it's going to $40 plus at call it 28 today. So that's been a good one for us. Golar has been which is sort of a LNG play for us that we've owned for a long time. That's a big position for us as well. And the Petrobras is another cheap oil name, 3 times EV/EBITDA that we've kind of held in there. I mean, energy's been a tough place to own, and so to having your largest sector being energy and beating the market this year is kind of I don't know what to make of it.
It's a miracle.
I mean, there's nothing more powerful than being involved in a sector that is the most underweighted in the entire S&P by fund managers, that has high levels of short interest, that doesn't pay attention to fundamentals, just quote oil prices. It was waiting. And so people think that we're bearish all the time. That is the most powerful long combination. So Vinny, on the energy complex, which I've been long also, and I really expressed it through a little bit of SOC, thank you guys, and ExxonMobil, you talk about if people really believe that we're going to be okay, we're not going to go into recession. The industrials and energy are 2 areas I think you've been focused on. Talk about those if you could.
People always ask us whether you're bullish or bearish. What do you think of the S&P? I don't have an answer for them. However, when people ask me this, I throw questions at them and say, well, are you bullish? And they're like, yes, I believe Trump, through this tariff relief, is going to create an economic spark and the like. I was like, well, if that's the case, why don't you own energy, right? Because none of this is going to happen without an increase in energy consumption somehow, some way. So the other thing that we've done recently,
and they answer, no, I just want to own the Mag 7.
No, and they said, no, Vinny, that's great. What do you think of Palantir? And I'm like, I don't think about Palantir, right? And so I just walk away. The other thing we've been buying lately and started adding like post-Liberation Day was uranium. We reduced our exposures, I'm going to say about 9 months ago, 12 months ago, 6 months ago. I can't say the reason why other than the fact that it was very overbought. And I think Camco made a gambit to ensure that spot prices of uranium went down because they were short. Fast forward to today, that spot prices have gone from 105 to at the time 64, 65. And I believe that Trump's energy policy is more about energy security and creating an export machine than it is about what he says every day, which is drill, baby, drill. And I know his Silicon Valley tech bros love uranium as a source of energy for data centers and the like. So the fact that I think the cleanest energy source and the most reliable energy source, which was down a significant amount, made for a really decent investment on the upsurge. And if you give me a second, talk about our process, right? Because at heart, our sandbox has been financial services guys. So we've had to teach ourselves other industries, which has been a heck of a lot of fun to do so. And we wanted to do it on our own dime because who the hell knew whether it was going to work or not. Part of our process that we do all the time is when we're going into a new industry or an industry we don't know as well, but invested in it. The first thing we do is call experts like ourselves in other sectors. And the reason why we do, and friends of ours, and the reason why we do that is because they know so much more than we do. And then from there, we could take what they say and provide an objective lens as to what they said and try to apply our capital accordingly.
The other thing is, in this sell-off, another example of a name that we were looking at a lot of these offshore services companies, the Tidewaters and the Nobles, and these stocks have gotten killed. I mean, they're down 60, 70% from their highs, and on Liberation Day, they take another 20% plunge, and we look at it, re-underwrite. Look at the cash flows and say, hey, is this business going to be around? And in another industry where it's seen massive consolidation, 1 or 2, 3 players left, and we can buy in at 3 to 4 times enterprise value, and we say, I think it's worth a swing, and it actually worked out pretty well for us. And so, trying to find, it's a 4-letter word, trying to find value in a world that's in a world of stocks that's really hated. I think that's how we feel good rather than just buying the market, right? Buying the Qs or buying whatever. So that's how we think about things.
Yeah, I called you, Porter, a couple of weeks ago because under the assumption that we would pull back these ridiculous tariffs with China, I was looking at the shipping stocks, and we mentioned Zim on the phone to each other. I think the stock was like $11 or $12, and I just wanted to check my sanity at the time. And I called you, go, Porter, you go, yep. And that was enough for me. I know. Are you guys involved in Zim here? Because one of the casualties, or good for them, bad for the consumer, is that shipping costs are going to go up dramatically here when everyone now wants to move everything. So is that transitory, or how do you think about Zim as a trading vehicle?
It's a funny stock because it's probably been our biggest gainer since we've been around. We bought the stock when it IPO'd, and it broke IPO price to went to 8, and then I think with dividends, it went to 120. And so we roughly sold it and bought it back again at 4 and wrote it to 28. And so post Liberation Day, that was another stock we picked up. And you think about, it looks a lot like COVID where it goes dry for a little while, and now everyone's going to be like, oh, we got to ship. And so rates are going to come back. And so, yes, that's another one we picked up and sort of at the bottom. Hey, listen, buy low, sell high, buy hate,
Buy the fear.
Buy fear is, sell euphoria. And so that's how we think about it, right? That's how we love doing that. It just makes us happy.
All right, guys. So we went through a lot there. Let's get to some fun stuff now. We got the PGA and the Preakness here coming. I'm sure you haven't handicapped or looked at the Preakness. I'll just get that out of the way, saying there is another Starlight horse running. It's the one horse goal oriented. So I run twice. It's won twice. It's fresh. I love it. It's 6-1. And I did love Citizen Bull, the one horse in the Derby, but you know that I picked the 18 separately because I thought it was the best horse. I actually think the goal-oriented is going to win this. I assume you have no comments on the Preakness, even though your fondness for the city of Baltimore, Porter.
No,
Okay.
I have no comments on the Preakness, but I do have a PGA.
Yeah, go ahead, Vinny.
Oh, yeah, I know where you're going. But I was just going to say on the Preakness, sticking with our process, when we don't know anything or much about that, we outsource it to the experts. So we call you.
There you go. Well, I'm a big believer in not looking at odds first. This horse is 6-1. That's why I think it's a great bet. Whether it wins or not, you got, the favorite at 6-5, second choice kind of 2-3-1. I go for value. Like we all do. All right, PGA. We used to do golf stuff all the time with each other. I can't wait to hear the thoughts here because I have some thoughts on.
Oh no, this is so. I'd be shocked if I don't know where he's going. It's so jaded and subjective. It's gorgeous.
Well, no, it's just simple. There's no bigger SOC bull than Phil Mickelson. So, and I actually got a chance to direct message Phil on Twitter about Sable a little bit, and so I'm a big Phil Mickelson fan these days. Yeah, I know he's a lefty, so very close to.
Yeah, I have my master's sign up here, Danny, from one lefty to another. Phil Mickelson, this guy when he first won the map.
I got my signed. I have my signed Mickelson jersey, Chaminade Mickelson jersey that belongs in Tom Healy's house, but won't take it, and it belongs in Hebel's house. And he won't take it either. Sorry.
Porter, look, inside Porter, zero chance.
This is zero. I know this is zero chance, but
chance of winning this thing. Justin Thomas at 16-1. You can't take McIlroy and Scheffler at like 3.5 and 4.5 to 1. They might win it. Or McIlroy's won at that course so many times. I'm sure that's probably what. But Justin Thomas, 16-1.
Didn't JT play well last week?
Well, yes, and he won the PGA on this course. So he's not only is he playing, and that was 2017. I can't believe it's been 8 years since that first time, but he's playing as well as he did back then, if not better. So I'm going to ride Justin Thomas again for value. So I don't know what you guys, other than your Mickelson pick.
My JT was my pick. As you could see, I've been spending time, more time watching the Knicks and the Mets than actually studying the PGA right now. But JT was my pick.
For the better part of 10, 15 years, we ran a snake draft on every golf major, where we would pick,
right, 4 golfers, 3 had to make
4 golfers.
Yeah. By the way, we didn't touch on sports gambling, which I think we should touch on. This Kalshi stuff, continues to be kind of a fly in the ointment for DraftKings and FanDuel, even though they've powered through them. Quarter was okay for DraftKings, missed slightly. You're talking about 20 million miss on multi-billion, but it is an amazing issue. You talk about the grift, Vinny, Kalshi's connections into Washington. It continues. It doesn't matter yet, but to me, it is certainly an issue going forward. I know you guys probably aren't trading a lot in the sector. As you guys know, I've been long Genius Sports, GNI. It's somewhat independent from that to a degree, but are you guys doing anything in the online gambling space?
Well, the problem is with the three of us and being parents, we've jaded our kids tremendously. And so my son comes to me last night. He goes, "Dad, the Sheldon Adelson owns the Mavs now, and he really wants gambling to go through in Texas. And of course, they're going to get the number 1 lottery pick." And so,
bang, you could have gotten great odds on that. By the way, he passed away, but Miriam is running the show now. But yes, I mean, seriously. Unexplainable. Luca goes to LA and blah, blah, why are you doing that? And bang, you get the number 1 pick. Come on. And what was it? Ernst & Young, I think, that rolled out the pieces of paper. Not even the spinning fake lottery thing.
No ball.
When Ewing and the Knicks was the last one that was fixed like this. I mean, I'm not a conspiracy theorist per se, but I wasn't the only person when they saw what?
What do you mean you're not conspiracy?
I can tell you this. When I saw there was 4 teams remaining that could be number 1, I would have bet $1 zillion at that point.
Well, yeah. If someone would have given you odds,
you could have gotten it somewhere. That's the beauty of this world we're living.
Some crazy. Luca goes to the Lakers. I mean, in the crazy trade.
Anthony Davis, right? So I know your Knicks and Mets. Your blue and orange is probably 2/3 of your wardrobe at this point. You're having a nice little run, Vinny. I'm very concerned that there's a moment coming here, certainly for one of the 2 teams, but particularly the Mets. As we move,
it's very hard to be a Mets fan because all our Yankee fans are making fun of us, like, "Oh, great start! You should just World Series, you just write it in." And so they're trying to jinx us because they know the Mets eventually something happens. Lindor goes down, Soto breaks an ankle, like something happens.
Vinny, how great is it that you guys have welcomed Porter years ago into the Met group. I mean, to have a guy like Porter as a Met fan, how many Porters are Met fans, Vinny? Like really Met fan? One?
One.
Yeah,
One.
one.
Him.
And how many of my people are Jet fans too?
That's
Zero.
true. Well, that you're a value
I
guy.
feel-
You just like pain. So.
But like I respectfully, I disagree on the Mets with you guys. I'm not saying bad shit can't happen, but
Of course it can.
we have a great owner. Period. I don't worry about them anymore because it's not like the Wilpon something's going to go wrong and there's going to be an 8-year abyss. I can't have the same conversation about the Jets. It's to the point where even if they're doing everything correctly, I still think they're going to lose, right? And I do think they're doing everything correctly. And the Knicks, I'm just enjoying the ride. None of us thought we were going to beat Boston. Nobody. And I'd love to see a Knicks. I think it would be great for basketball to have a Knicks Pacers.
It brings back
Eastern
the
Conference
Reggie
Final.
Miller days.
Yes.
Well, guys, we'll be back. You guys will be back on the tape, I'm sure, while it's probably still, obviously, it'll still be baseball season. We'll be getting into football season. We'll talk about that then. We'll have probably another major around that time. I'm thinking around sometime around the Open over in Ireland this year. But, guys, I can't thank you enough for coming on for another episode of What Are We Doing? Great to hear your thoughts. And I will see you in person soon.
Thanks for having us.
Thanks, Danny.